Folks, I've been getting tons and tons of email all week. As a matter of fact, it started about a week and a half ago, and my question is very similar. Have pot stocks and electric vehicle stocks peaked out, right? That's what everybody wants to know. So let's talk about that. Let's answer the question. Have pot stocks and electric vehicle stocks peaked out? Right now, the Russell 2000 is trading below the 50-day moving average. The reason that's relevant is because the Russell is home to some of the biggest pot and electric vehicle stocks, and with the recent meltdown in recent days, many investors are wondering if the rally is over or if we're just seeing a pullback in the two sectors that have heated up most in recent months. Now, the first thing we want to look at is the flow of earnings from some of these stocks in these sectors, starting with pot stocks. Now, TruLieve, ticker symbol TCNNF. Now, this is the fastest growing pot company in Florida and gives us a good indication of where the industry stands. It also happens to be my favorite pot stock in the space and happens to be the best performer since the start of the year. The stock is currently trading at the 50-day moving average. And considering it's gained close to 500% since I initially discovered it, I believe it has the substantial to go higher, to go much more upside potential, and it's merely taking a breather right now. Most noticeably, its revenue in the ending quarter of December 31st of 2020, the stock rose 110% year over year to $168.4 million, beating Wall Street consensus estimates of $160 million. On a full year basis, it's reporting revenue of $521 million, representing year-over-year growth of 106%. TruLieve Cannabis posted net income of $3 million in the fourth quarter, or 38 cents per share above the market's expectation of 22 cents per share. The company's forecasting that 2021 revenue between $800 and $850 million, and technically the stock appears to be headed higher, substantially higher. Some analysts believe, simply based on the current forecast, the stock can gain an additional 30%, and that's a conservative estimate. Other stocks in the cannabis space are showing the same type of growth in earnings trend, which tells me the current corrective pressure in cannabis stocks is merely a pullback and not a topping pattern. Especially when you consider how friendly the current political climate has turned towards pot stocks in recent years. If you look at the sector as a whole by way of the Alternative Harvest ETF, ticker MJ, you will notice that the industry is shaking off a major run-up in price. But I believe after some consolidation, price will revert higher once again, probably a bit slower, but giving us sustained momentum as long as earnings and political environment stay friendly. Second sector we want to consider is the electric vehicle space. It's been beaten down in recent weeks, and stocks like Tesla appear to have lost much of their momentum levels. But if you look at the industry as a whole, it's heating up fast. Let me talk to you a little bit about this. Volkswagen outlined a plan to become the world's largest seller of electric vehicles by 2025, with the intention of investing around 46 billion euros, that's about $55 billion, to electrify its lineup. Separately, in late January, General Motors, the largest U.S. automaker, announced that it's going to launch 30 electric models by 2025. And get this is a kicker. By 2035, it's only going to produce electric vehicles. Did you guys hear what I just said? Only produce electric vehicles by 2035. No more engines. If you look at the performance of electric vehicle components and raw materials for batteries, and compared to the S&P 500, it's outperformed it by 8.3% year to date versus 3.6% for the S&P 500. That's more than 2 to 1, or roughly thereabouts. And if we look a bit further back, we've seen upside of about 45% since the end of 2019, compared to the return of about 20% for the S&P 500. And I'm expecting this trend to continue. First, regulations under the Biden administration are likely to be favorable for green technology, including renewable energy and electric vehicles. Secondly, mainstream automakers are making bigger commitments to electrification, and this should drive up demand for electric vehicle suppliers. Therefore, I believe the current downside pressure is merely a reaction after seeing a big up run a big run-up, in price, and ultimately, we're going to see some corrective pressure. It's healthy for the market and needed before stocks can expand substantially into further momentum growth. I'm looking at the current scenario as a buying opportunity, and I believe once we see a shakeout from the large cap tech, there's going to be more upside for both pot stocks and electric vehicle stocks in coming months. Therefore, I believe this is a mere pullback for both sectors, and I'm looking for a buy opportunity. If you want to be on the safe side, wait for both sectors to trade above the 50-day moving average, at least for a few days, and then you have a nice enough pullback to begin. Start out small and increase your exposure as we get higher into price level. But yes, I'm almost certain that this is just a mere pullback, a temporary setback, and price for both sectors are going to run up higher. Hope that helps. Folks, you've got to hear this for yourself. Wall Street insiders and huge institutional traders have used a hidden force of nature. That's right, a hidden force of nature discovered by Dutch physicists to amass huge fortunes. And for a limited time, I'm pulling back the curtain to show everyday folks just like you how it works. Folks, with this info, anyone can target red-hot profit opportunities every 2 weeks or less before they explode. All you've got to do is click on the link below to learn the strategy for free, no cost. Make sure to like this video, subscribe to this channel if you're watching it on YouTube. Stay ahead of the market. Please stay ahead of the market by being the first to be notified when we post our next video.